United Wholesale Mortgage, speaking of UWM, it's the largest home lender in the U.S., and I spoke exclusively with UWM Chairman and CEO Mat Ishbia about the housing market, lending standards, and the NBA's Phoenix Suns, which he purchased just earlier this year. I started by asking him if housing has, in fact, already seen a bottom.
You know, I don't know if the bottom's in, but I guess I don't think it's really hitting the bottom. I think we've actually been fine. I don't think it's gone on this huge tank. People think values are going down. Values aren't going down. People are still bidding on properties. There's still supply and demand issues. So bottom, I don't know if we actually hit a bottom. I think we're actually in a good market. I think people are buying houses, and I think it's going to continue even through the winter.
What do you think is more impactful in terms of the state of housing right now? Is it the affordability issue or is it the availability issue? And I guess as long as those two things exist, do we see anything different than the dynamic that exists currently?
Yeah, you know, obviously there's less houses for sale. Everyone wants to talk about that. But the reality is people are buying houses, and more and more, it's hard to move out of a house. If you have a 4% rate or 3% rate, people don't want to move as quickly. So there's less house on the market is what a lot of people say. But the honest truth is we've seen consistent growth in people buying homes more than you'd expect in the last 6 months when people are thinking it's going to be a down year and everything's going to be. Like we set our all-time record purchase quarter in the second quarter, like all-time record. It's never been done. Like it's still happening out there. Business is moving and people are buying homes.
So what does that mean for the trajectory, not only of the Fed, where the expectation in the market right now is that we get one more rate hike next week, and then maybe we're done, but what does it also mean for mortgage rates?
You know, mortgage rates are where they're at. Like, I think they're going to be between 6 and 7%. That's what we've all been talking about, maybe 7.25%. But, like, they will drop at some point. The way I tell people, if you're buying a house, 30-year fixed rate, like, that's the highest your payment will ever be.
Yeah, I mean, the spread between the bond and mortgage market remains pretty wide. It's, almost double its historical average. What do you attribute that to, and is that a dynamic that is going to, I guess, fix itself anytime when you think about quantitative tightening or you think about banks rethinking their investment portfolios?
Yeah, it's a great point. A lot of people don't talk about what you just referenced. Is at all-time highs right now, that spread. And so with rates being high and that being an all-time high, that's why mortgage rates are so high, right? Tying that. So one of those two things drops, mortgage rates will drop, there'll be a lot of refinancing, and the mortgage market will really pick up, and people can save money in their mortgages. Right now, it's been 2 years of rates basically between 6 and 7%. So that's $3-4 trillion worth of mortgages. Those people are ready and willing to refinance and lower their payment and save money, which then spurs economic development across the country. If you save $100 on your mortgage, I save $100 on my mortgage. What do I use that money for? That helps the whole economy. So I think a lot of that stuff comes. I just don't know when.
The last time you were on CNBC was actually early March. So it was before everything that happened with SVB and all the regional bank turmoil. Has the lending market, and I guess has it contracted? Has it contracted enough?
You know, I think there were some weird things going on with those banks and a lot of things that were anomalies, one-off things. I don't think much has changed from that. I don't think there's, you know, are there controls in place? Like, I think the mortgage market, people like to reference 2008, the big crash. Nothing like that's happening anymore. Like the market, the CFPB, give them credit. The markets are stable and strong. The mortgage market's strong. Are there going to be blips and random things that happen? Absolutely, just like in any industry. But I feel like the housing in America, the mortgage market in America is really strong right now, and it's only going to get stronger for the next 12, 24 months.
So have you seen banks pull back in lending? And I ask that question because if so, what does that mean for UWM?
Yeah, no, we are like everyone else. Like Wells Fargo, Chase, all these great big companies, like we're the same. We're just bigger than all of them right now. And those are great companies. But lending standards, we all meet Fannie Mae, Freddie Mac, and FHA/VA guidelines, which is Ginnie Mae. And everyone kind of does the same type of mortgages. Who can do it fastest, easiest, cheapest? And that's what the game is. And when you only focus on one thing, like we do mortgages, just like our mortgage brokers do, that's why we tend to win, because we can do it faster, easier, cheaper, and people like it. I'm in an interesting industry. No one likes mortgages. No one wants a mortgage. They want the house. And so we want to make the mortgage fast, easy, and cheap, and that's what we focus on.